Okay, sound check. Am I coming through? Let's see. Marlon, can you hear me? Am I coming through here yet?
Hi, Gordon. Yes, sound is good.
Oh, good. Good. All right. Give me a second here. I'm going to try and share my screen. I'm just a little. All right. I'm going to try and share my screen, and hopefully this will work. Okay. Marlon, are you there? Can you see the screen?
Yeah, I can see the screen.
Okay, fantastic. I'll be able to go forward from here. All right, everyone. Welcome to Which Stock to Trade Now. Here is just a simple chart of what is going on with this wacko, crazy market situation. And what I've got is just three different panels of NASDAQ 100 and Apple and Microsoft. And these three stocks are important to watch right now because they're probably the best leading indicators, if there is such a thing, of where the market is likely to turn. The big question is, will the market turn and go down and resume this big, ugly downward trend, given that the Russia invasion of Ukraine has gone full scale and is so harrowing, and there's all sorts of really bad headlines about it. Some people say things like, first time we've seen war in Europe in decades, land war in Europe in decades, right? So really big bad stuff. I'm not at all interested in trying to minimize that, but what I am noticing is that headline sounds so scary that I would have expected a whole lot more red, a whole lot more selling. And what we're doing right now on these charts doesn't look like a market that is getting scared. This looks like a market that is trying to figure out whether or not it should be a buyer. And to me, that's a big problem, because it says that somewhere, somehow, the right information, or not the right, the right level of information is not flowing to the same people in the same way. In other words, the general public is getting one set of information, and high-end investors, high net worth investors, funds, mutual funds, pension funds, whatever, are getting a different set of information. Now, maybe one side of the other is inaccurate, or maybe it's really the same. It's just that two different people have two different classes of people have two different approaches to it. All I know is that that huge green candle that we see on these charts is indicative of the fact that the Russian invasion had already been priced in to the markets. So while headlines are saying, hey, Russia might invade. Hello? So Russia might invade, and we might have to do something about that. While we're kind of getting that type of message, we're the stocks are just heading down. I mean, look over here on this NASDAQ panel. Since the start of the year, 2022, just nothing but down, 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 right? And there is not a green candle that is anything the size of what happened just last Thursday, all the way down. So what we're seeing then is the pricing in of the Russia invasion starts at the beginning of the year, at least, among NASDAQ traders, but it ends on Thursday. So the NASDAQ makes a 20% fall. Let's see if I can get that just right there. Okay. The NASDAQ makes a 20% fall. A 20% drop is, bear market. Bear market for the NASDAQ. That's the kind of indicator they give to say this is a bear market, right? Which is really just a meaningless name. But the importance of it in this scenario is that it tells us whether or not, it implies whether or not people have a preference of getting their money out of the markets rather than hanging around, keeping it in. And when you're in a bear market, people are all just looking for ways to sell until they finally sell everything they're going to sell, and everything else they're like, okay, I don't care how much money I lose, I'm just leaving it right where it is, right? That's what's called, people label that, market analysts label that capitulation. It's just like, okay, fine, I'm gonna throw in the towel. I'm not gonna try to be a trader or try to pick the bottom. I'm just gonna sit back and do nothing. And then there's this big, all those people get out of the market, and it washes prices lower, and then from there the market just tends to reverse and work its way higher. That moment of capitulation is usually characterized by a big long drop, but it usually also comes a good bit after a 20% drawdown. In other words, if there's a bear market, it's then in the bear market territory. Somewhere after that, the big selling starts, and people finally have some sort of capitulation, 30, 35, 40, 50% lower from whatever high point. And so the idea that, wow, we get down to that bear market marker at 20% and boom, that's it. That's the end of the panic. That's not usually the script, right? So we look at this and we say, okay, we got a 20% drawdown that's happened here in the NASDAQ, and a capitulation like move occurs right at the bottom of that. So I step back and I look at this and say, this is not a market that really wants to stop investing. these are people, the dollars behind this, these are people that need their money to continue growing, and they're willing to take risks in order to keep their money growing to a certain degree. When people start pulling their money out of the stock market, they're afraid of losing it, not just a little bit of it, but losing most or all of it. And they move their money to something safe like bonds or even money market because their attitude becomes, don't lose my money. I heard this from professional money managers who said that when people are trying to grow their money and they're trying to get to a point where they feel like they don't have enough now, and they're trying to get to a point where they feel like they have enough, whatever that is for them, then they try to say, grow my money, grow my money, grow my money. They hand money to a professional and tell him or her, grow my money. Okay. But if in fact they feel like they have enough, that they have sort of arrived, then at that point, their attitude switches. And he would characterize it this way. He'd be like, if a guy comes to me and he's got $1 million or 2 million or $3 or $4 million, that guy usually wants to grow his money. Once he gets above $10 million, now these numbers probably changed for today. I was having this conversation with someone about 10 years ago. But at that time, he was saying once you get about $10 million or more, it depends on the person. Some people is 20, some 50, whatever. But once you get to that level, then they are not interested in taking risk at all. They're like, don't lose my money. I don't care if all I have to get is 4% or 3% gain on it, whatever. I've got plenty. My whole goal at this point is don't lose any of it, because I still have 10, 20, 30, 40 years of life left, and this is what I'm living. And I want to be affluent that whole time, right? So when people have the attitude that I don't want to lose money, then they move it out of the stock market and they put it into the bond market. And that is the kind of, it's not like everybody does the same thing, but when enough people, right, a large enough portion of the stock market, 5% of the investor population, 10% of the investor population, whatever it is, when enough of them decide, that's it, I'm out, I need to not lose my money, then that's when a bear market hits, because a bunch of them start selling, and they sell little by little by little, and they're just like, oh, market's going down, fine, get whatever you can get for me. Maybe wait for it to go up a little. Oh, it's not, okay, fine, just sell it, And by selling it, we mean take it out of the market, out of the stock market, and put it into either the bond market or the money market, CDs and stuff. And so the big question then, when you look at these charts in a moment of capitulation, the bigger sort of macro question you have to ask yourself is, are we at a point where more people want to protect their money than want to grow their money? The mere fact that we're not staring at a big red candle today makes me think that we are not at a point of bear market. We are not at a point where people want to get rid of their stocks and just sell out and say, don't lose my money, I'm going to move to the bond market. Notice that although we've got the NASDAQ has dropped and it's coming down a little, it's not a huge amount, right? We're down. Let's see, what are we today compared to the day before? We're down 0.72%. So we're down not even a 1%. But if you look over here at Apple, we're only down by 0.5%, and at Microsoft, we're only down by 0.5%. And you could see the numbers, they track, 0.8, 0.6, 0.6. So in other words, Apple and Microsoft are not down as far as the NASDAQ. That is a little bit of a bullish indication. We don't have the big stocks leading the index lower. And so to me, I look at this chart and I say, I know what the headlines are saying. And that sounds really bad and scary. You've got two nuclear powered nations at war with each other. The one doing an invasion, the other arming their citizens with automatic weapons. And you've got Chernobyl, among other things, literally a nuclear reactor that is part of the equation here. That nuclear reactor, Chernobyl, at one time, when one of its power plants, exploded. The HBO series was fantastic on documenting all this for everyone. At that time, they believed it could threaten, depending on wind direction, the majority of the population in Europe, with some amount of health damage. I mean, it's not like death. Even if you get some radiation, you're going to die instantly, right? And some people might not have died at all, right? But just have some sort of ill health effect. I think the potential damage, which is my guesstimate on all this, was overstated of what could be done. But if Russia were to somehow capture Chernobyl, or not even capture it, just go sabotage it and blow it up, the catastrophic consequences on not just Ukraine, but Poland and Hungary and some of the countries around could be serious. It could be bad on Russia too, or Belarus. I mean, that would be a super crazy thing. But this whole thing, quite frankly, seems super crazy. And I'm just even talking about that right now, just because that is one sort of outlier condition. The reality is that a single, not even stray, but guided nuclear missile into Kiev, well, that would be horrifying. But that's not off the table. Why aren't we just huge, big red? The answer is politics don't really matter. And for all the tanks and bullets and fear, and rightfully so, on the part of people involved in that situation, it's not changing the markets. It's not changing the global political situation. The proof of that we're staring at right now. And so you look at this and you say, you mean the market doesn't care if people are worried? No, it does not. What it cares about, because what the market is a collection of people's needs regarding their future, their financial future. And if somebody says, look, things could be bad, I'm going to need more money. Well, yeah, but if you keep your money here, you're at risk of losing all of it. Oh, okay. Well, in that case, I won't invest here. I'll take it out. But if you say, no, I don't believe you, I believe it's better for me to keep my money here, because anywhere else is somehow no less safe. Bitcoin, are we kidding? That's super volatile. We don't even know if cryptocurrency is going to be a thing in 10 years. It could just go away or get replaced by something else, or get regulated out of existence, whatever. I can't trust Bitcoin. I can't trust cryptocurrency more than I can trust the stock market. I can't trust, this or that government issued bond, because, well, that's the problem right now. Politics, governments are fighting. So I don't know where I'm going to put the money. I can get my money in and out of the stock market in a matter of hours. It's fairly liquid. Yeah, I think I'll just leave it right here. Okay. That is the mindset. That is the attitude we're in right now. Given that the money is staying here, and given that there's all this geopolitical uncertainty, well, that is associated with more need. People want to try to grow their money. And if we didn't believe that that was the case right now, we would not understand why there were these huge green candles. The fact that they are there, the fact that we're not just collapsing lower, says this is a market that wants to hold on, that wants to try to go higher. And so it's probably a good idea to try and find things to buy, to try and search for here. So I'm just going to go ahead and go to. I wanted to go walk through all of that because you're probably wondering. I just feel like most people are wondering, what should we be doing right now? Is now a good time to even trade at all? And the answer is, yeah, it is a good time to trade. It is a good time to try and find stocks to buy. But what kind? Well, probably you're better off trading large caps, stuff that isn't at risk, or stuff that it is, you know, let's do it this way here. I was going to say defense contractors, right? Though everybody thinks defense contractors right now, but really it's go one layer further. The things that defense contractors would spend money on, and what is that? Well, technology. And so, as simple as it sounds, technology is probably the right play. So if I just go to the technology sector and I say I'm going to look for average volume over 1 million, I'm going to look for a relative volume of over 1.5. So I'm looking for stuff that is trading at a pace of 50% more than normal. Just searching on those things alone, I'm sorting down to 39 stocks already. Pretty cool, huh? And so if I come here and say option, I want to make sure that it's both optionable and shortable. And that's just going to take out a couple. That's probably the case. And it's probably appropriate there. And then I'm going to sort on price. And then let's look here. So I'm not really interested in going after the low cost stuff. That's a little bit more risk than I'm interested in. But we'll start down here at Sonova Energy, and that's a solar power. McAfee Corp is software. So that's interesting, McAfee, because that is like a company that's antivirus, right? A lot of cyber war stuff going on. You would think that maybe that would be an interesting investment. But I'm just looking at that chart, and we're going from a whopping $25.60 to $26 yuan. That thing is not going anywhere, so we're not going to touch it. Sunrun is a really big down move, but jumping up. Now, most technology would be down, but I love the fact that this is gapping up. So that is probably worth looking at. Now, that's solar, though. Solar energy. I think solar energy is kind of a big risk. It's like you're dealing with times of war. Who's gonna, a defense contractor? Are they gonna come and they're gonna spend money on a solar power company? Maybe, but probably a better bet that it's just a plain old software company that they're gonna come after, right? How about this one, Everbridge? So it gapped down but hasn't gapped up. No, don't want to touch that. Let's go to these stocks here that are a little higher in price. I'm not interested in ASML stuff that's super high priced stuff already. Well, maybe. I mean, it depends. And yeah, no, that doesn't look good anyway. So I'm just gonna try it. Whoops, I keep clicking on these. I don't want to click on these. Just kind of roll over them if I can. Let's see. Now that chart pattern is actually interesting to me. See how it's trending up, it's come back down, and now it's jumped up, right? I don't like the idea of entering right now, but maybe later on in the week. So you get the idea. All right, well, let me keep going down. Solar Edge. No, I'm going to skip the solar stuff. I mean, that might be interesting, but now that's an interesting pattern there because it was a big jump, but then it dropped way down, and now it's coming back up. If that had been a red candle, big red candle and then a small red hammer and now a green one, I'd be interested. But because it's the other way, something weird's going on. I'm not interested. And let's look at CrowdStrike. That could be good. That could be really good right there. CrowdStrike has this gap and it's coming up. In fact, so far, I would say that is whoops, I don't know what I hit. Number one. Let's see if we find better. So Coinbase. If you were going to invest in Bitcoin, you would think that this would be the stock to do it with, Coinbase. No, that's an ugly looking pattern. I don't want to touch that. I need to see something that is gapping up or that has a tall range. And because the market really isn't pushing higher today, I don't expect there to be a lot of tall ranges. But if I found one, I would be interested. Now, this one right here, this actually looks pretty good. This is, see how we've got a gap and some movement above the gap. So this would be my Enphase first, then CrowdStrike. Checkpoint software. Yeah, Enphase is solar. I was kind of dismissing. This is interesting. Checkpoint really popping up higher. That's very interesting. I'm not the kind of guy that can just jump on and buy this, but that I would be very interested in, especially if I could get a little bit of a pullback and then movement, some sort of support. And then we'll go block SQ. Oh, this is probably another, isn't this like blockchain? Oh, no, this is Square. These are the people that handle payments. Yeah. So alternative finance, fintech. That's pretty good. Although the gap was yesterday, the gap is holding. I like this one too. So I like the fact that it's not a solar. Enphase is a good looking chart, but it's solar, and I just don't know how much room a solar energy thing has to run. If you're going to do energy, let's just do energy. Let's go for oil. Taiwan Semiconductor, negative. And what do we got last? I don't want to spend too much time on this. DigitalOcean, well, I guess I'll look there. Yeah, no, all right. So Square, Checkpoint, and Enphase, and CrowdStrike. Those would be the four. And of those, I think I like Checkpoint to wait to come back, and Square and CrowdStrike for possibly today. And between the two, Square is probably more likely to be tradable options. Let me check those quotes really quick. Sorry, I can't show that to you on screen. I'll just check what the quotes are for Square and see if the option quotes are tight enough. And what I'm seeing here, let me make sure I get to singles. How can I get to singles? Yeah, Square's options don't look super good for being tight spreads. I don't know why I can't turn those off, but so not Square, and that leaves us with CrowdStrike, CRWD. Let me check that. These options are a little better, but they're still not tight enough to do what I would want to do with them. So both of these, I would say, are share trades. As a result, here's what I want to do. I'm going to try and just go back to the chart and set up a scenario of how I would look to do these. So you've heard me talk, of course, about the different ways. Yeah, this is definitely the one I would be most interested in. So if I were interested in making a buy right now, then it would probably be something like this. I would want to, okay, I'm going to see if I can move that line or not. I don't know if I can. Right. Let's put this on regular so we're at price. Current price is trading around 122. So let me just change that to be 122 even. All right, so right there, somewhere around 122 is where I would try to make an entry, okay? And then I would try to set my stop someplace down here below the gap. So I'd want to let the whole gap be accounted for. And that's where my stop would be. That's at 92. Now you might look at that and say, that's a really wide stop. Yeah, this is a really volatile stock. Look, we went from 200 to 100. Good chance we could go right back to 150 in the blink of an eye. And so I've got my stop clear down here at 92, $30. And now depending on how I do my, trade setup, am I more interested in risking 2 to make 1, or am I more interested in risking 1 to make 2? That sort of thing, right? Now, you've heard me. I'm a lot more of a risk 2 to make 1 kind of trader. So I will be interested in going from 122 plus 15. That's going to be 137. That would be my profit taking target. And that's the way I play the game. Risk 2 to make 1, so I win most of the time, and I get this little bit of edge. I get this edge in this case because the gap is going to hold support in theory, and then maybe turn around. $15 is also enough room for me to perhaps at one point take the lid off and let those profits run, if in fact they do. And so I'm going to see about doing a paper trade here so we can just sort of track this for fun and say I would get in. We'll just take it right there, 121.94. The take profit is 1,500 higher, $15 higher, and the stop loss is $30 lower. And I want to risk 1% of my account. This is a paper trade account that has $228,000 in it, and so it's telling me they would buy 76 shares of the stock at that price with that much stop loss. So in we go, and that again is a simulated trade, a paper trade. But that's how I would set up the order. Oh, so right now it's up above 122. So just while I was talking, it went up above 122, and it's going to have to come back down and put me in the trade because I specified a limit price of something or other. Or did that order simply not go through? It says order sent. Interesting. Well, I'll have to see how that goes, or if that is just being queued and in the system right now. But see, the if it was 121 and something, then it's got to come all the way down to wherever I put that limit. Unfortunately, I would have liked to have just gone ahead and got in. So we'll see whether or not that goes through. But that's how I would set the trade up. That is the trade it would take. Square looks like the best trade given the circumstances for today. Hopefully my commentary has given you some idea of how to think about what trade you would like to do. Until we do this again next time, take care